Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. He listens, he hustles, he speaks with intent. Every signature more than the dark.
Good morning and welcome to the What's Up with the Real Estate Show, and I'm Mortgage Mack. And today we're talking about shifting buyer dynamics, slower sales, and mortgage rates moving and doing their yoga stretching. But this time we're going down ever so slightly today. And you know what? Let's remember, this is a live show. And markets move, headlines break, but technology occasionally has an emotional episode, and yours truly may occasionally say something brilliant and or funny, but more likely it will come from our co-host, ChatGPT Soul. Introduce yourself, please.
Thanks, Mac. I'm thrilled to be here, keeping an eye on the market while adding a bit of wit. So as we stretch into these mortgage rates, let's dive into what's happening with homes selling above list price.
That's
Ready
right.
when you are.
That's right. All this and more news you can use for week ending April 17, 2026. I'm your host, Mortgage Mack. First name Mortgage, last name Mack. And you know what? We believe in building relationships with buyers and their agents to help, and their builders to help everyone win, along with my favorite co-host, your favorite co-host, everyone's favorite co-host. Never late, never cancels, always on time, ChatGPT Soul. So let's get started with segment number one. Well, buyers aren't overpaying like they used to, and sellers are finally starting to notice. And according to the National Association of Realtors, in March 2026, only 18% of homes sold above list price. That's down 21% from last year, and down from 40 to 60% during the frenzy connected to the pandemic. The bidding wars have cooled, and expectations are becoming more realistic. In Houston, Sugar Land, and the Woodlands, we're seeing the same trend. Homes are still moving, but pricing matters again. Overpricing, well, that's what they call extended marketing. So,
Well, Mac, with bidding wars cooling off, let me ask, are we officially in a buyer's market yet? Or are we just inching toward balance? And what's the biggest pricing mistake you see sellers still making out there?
well, first question is, are we officially in a buyer's market? I'm of the mind that yes, I'm coaching my buyers get prepared, put our offer strategy together, and we believe that we're in a much better situation if we have a good strategy uh, to negotiate concessions if necessary, compared to the frenzy we experienced during COVID and the pandemic. Absolutely. Now, what was that second question, please, Soul?
Of
In
course.
regards to seller pricing, well, I think that I'm going to say what Mr. Mercer used to say. Anybody knows Larry Mercer? Legend in real estate in Houston, Texas. And he would say, if it's not selling, there's only three problems. It's overpriced, it's overpriced, it's overpriced. How's that for an answer?
That's a classic, and it hits home. Now let's keep the momentum as we move into segment two, because existing home sales have been giving us a reality check.
That's
Ready
right.
to
That's right. Talking about that, well, let's move into today's talking point number two. Sales are still stuck in slow motion, and there's two big reasons why. According to National Association of Realtors, existing home sales dropped 3.6% month over month to 3.9 million annual pace. A normal market is closer to 5 to 5.5 million. So what's holding us back? In Houston, we still have demand, but affordability is tightening, especially when we saw that spike in rates after the February dip. Buyers are qualified, but hey, you can't blame for folks being cautious today. So is this demand problem? Is this a demand problem or supply problem?
It's really a bit of both. Demand's still out there, but supply is constrained, and affordability just puts a lid on how many can act. Now, Mac, how are you seeing buyers adapt to these cautious conditions?
Good question. And I believe a lot of buyers have made inquiry with regards to buy downs and specific strategies for negotiating price, negotiating cost. And like we said in the first segment, we have transitioned to a market that is more, maybe not a full blown buyer's market, but it's certainly more advantageous if you're a buyer. And we believe in in buyers maximizing their opportunity connected to the financing in partnership with the real estate agent, going in, making an aggressive strategy for making the offer and winning. And then once we win the offer, preparing ourselves during the option period to be prepared to negotiate concessions if necessary based upon approval, based upon inspection, based upon appraisal, because we're even getting the appraisal done during the option period. And we've seen that having the contingencies removed during the option period so really puts our buyers in a position to negotiate concessions if necessary.
That's a strong strategy. And speaking of positioning, I think this is the perfect moment to glide into our break. After that, we'll stretch right into those mortgage rates, doing their yoga, as you like to say.
Yeah, it isn't a broken markets, but it's sort of like a gridlock at this point. And hey, if you're thinking about buying but unsure, drop plan in the comments and we'll connect with you and we'll share with you our strategy for planning your mortgage and also for our strategy for making an offer and putting you in a best possible position to win the offer and negotiate concessions. And now for a break from rate.
I went with another lender thinking, hey, it's all the same, right? Wrong. I didn't get the same day mortgage experience. Know what I got instead? Waiting. Lots and lots of waiting. Rate would have had me approved in 1 day. Home in no time. But nope. I went with another lender who turned out to be a slowpoke. Missed out on a few sweet houses because of it.
Hey, thank you for that, Rate. And, buying a home shouldn't feel like a guessing game. And with our same day mortgage strategy, we move you from application to clarity in a really, really short time frame. And, our offer strategy is built on education, empowerment, execution, and experience. And if you don't have our mobile app on your cell phone, go to www.mortgagemac.com, click on the QR code, download your free copy, and be sure to choose yours truly as your mortgage loan originator. Now, moving on to this week's mortgage rates are easing, and the market is already pricing in the future. According to Freddie Mac's PMS Primary Mortgage Market Survey, rates are now around 6.3, down from recent highs 2 weeks ago of 6.65. The market appears to be anticipating a cooling geopolitical environment. Meanwhile, the Federal Reserve, or the Fed, is expected to hold rates steady at the next meeting. In Houston, this shift matters. Even a small drop can increase buying power significantly. So, are we likely to see rates continue down or bounce back?
It's likely we'll see some bumps along the way. Markets rarely move in a straight line, but if broader inflation continues easing, we might see a gradual downward trend. Now, Mac, how are you advising clients who are wondering whether to wait or lock in?
Lock in. Because we offer a free float down option. So if rates do improve by 0.25% or more, then we'll give you an opportunity to renegotiate that rate. And so you can't lose. And objectively, rates aren't the driver. The monthly payment is the primary driver. And I share this with buyers all the time, share this with real estate agents. And, the question consistently is, hey, what price point does this person qualify for? Well, it's not so much about price as it is about payment for us, because the price just sort of a variable connected to the payment, which is what we use for qualification. So
That's a perfect way to frame it. At the end of the day, buyers need to be comfortable with that monthly commitment, not chasing the perfect rate. And with that in mind, let's talk practical tips, because this is where we help folks plan their moves.
That's right. That's right. And you know what? You're doing a great job of hosting today. I really do appreciate it. Mortgage rates are like that friend who says they're leaving and then hangs out for another hour.
And sometimes they even come back with coffee. Now, speaking of sticking around, let's move into our next practical segment.
Yeah. Nobody wakes up excited about a mortgage, but they do wake up excited about buying a home and owning a home. And here's why. One, predictability. Fixed rates equal stable payments. And, I meet people all the time that pay rent, and those rents are rising, rising, rising. Tax benefits, IRS publication 936, mortgage interest is deduction, taxes are deductible, but subject to your existing, what do they call that? I itemize deductions, but standard deduction stability. I can't say enough about this. If you're paying rent, I know I grew up in an age where you paid rent before you could buy a home, and I remember what it felt like on an annual basis, anticipating the rise in my rental costs. And for buyers who want the one thing they should be thinking about right now, Sol, tell us.
The one thing they should focus on is strategy. It's not about timing the market perfectly. It's about having a clear plan for what's affordable, what's realistic, and what will bring them stability. Speaking of plans, what's our next segment, Mac?
Well, you know what? Let's say this first. If you're even thinking about buying a home, let's map it out. No pressure, just clarity. And in other news this week, there was a lot of information came out that we believed was relevant. And here's a headline that sort of raised some eyebrows: a 10 million home shortage in the U.S. And let's talk about that and what inflation is quietly doing behind the scenes. And this was a report by the Public Broadcasting News Hour referencing a White House report. The U.S. is facing a housing shortage of up to 10 million homes, along with a proposed federal blueprint to address affordability and supply. Now, historically, estimates from sources like Freddie Mac and National Association of Realtors have placed that shortage closer to 3 to 5 million. So I sort of question the validity of the 10 million, but hey, I haven't read the whole report. Maybe they're projecting into the future based upon the current number of homes that are being built versus population growth, but I'm not so sure the population is growing. And, particularly during and after COVID, a 10 million is, let's call, super, super high number. At the same time, CNBC reports that March 2026 CPI remains elevated in key categories like housing and services, even as overall inflation is still stabilizing. Yet, and when you connect those two stories, here's what matters. Whether the shortage is 5 million or 10 million, the real issue is supply is not keeping up. And that fundamentally is the challenge. And when supply is tight, prices don't fall easily, even when inflation is cooling. So,
Exactly, Mac. And when we break down inflation, shelter costs are still sticky. Now, how do you think this housing shortage narrative influences buyer behavior, especially here in Houston, where we still have room to build?
I'm not quite sure what the answer to that question is, but I can tell you that I don't think that buyers are really honestly contemplating housing shortage when they're out there shopping for homes. I really don't. I think this is a subject matter specific for the industry professionals for consideration, for us to begin to impact politicians and policymakers to take some appropriate action so that we can build more homes, create a more affordability. And I don't really believe that it's an active part of the thinking connected to a person that's buying a home. So,
That's a fair point. For most buyers, it's about their immediate situation, not the national headlines. But speaking of immediate, I think it's time to lighten things up. Let's segue right into some fun with puns.
well, we have to do our war report first. So let's move into our war report as we shift from markets to something more important. We take a moment to recognize human costs beyond global conflict, behind the global conflict. Now, unlike mortgage rates or housing data, there is no single real time source that gives us an exact weekly global loss of life, but we can rely on our verified organizations like United Nations and several other organizations, all of which confirm the same truth. Conflict across multiple regions and other countries continue to result in the loss of life. Men, women, more importantly, children. So rather than focus on a number that may or may not be precise, we're going to focus today as that every loss matters, every life carries weight for beyond a statistic, and a better future for all of us isn't built through conflict. It's built through knowledge, cooperation, and restraint, which brings us to this week's Stoic quote. And moments like this, like that, remind us power isn't just about strength, it's about restraint. And Seneca said, "He who has great power should use it lightly." So,
And that quote really brings perspective. Whether in leadership or everyday life, a lighter touch often has the greatest impact. Now, speaking of lighter, I think we've earned a smile.
I think
Let's
so.
glide into fun with puns and end on a high note.
You've been trying to get us to fun with puns since since 2 segments ago. So, hey, I get it. And because, hey, if there's one thing housing market has taught us is really, really bad jokes help us cope. So, you ready, Soul?
Always ready, Mac. Let's start with a classic. Getting paid to sleep would be my dream job. And with
Mine too. And let me tell you, the older you get, hey, the more you sleep, and if you contemplate that, and I think about that, it's like, well, everything else is pretty boring, and I do enjoy my sleep. And I'm a napper. I take a nap almost every single day. Iron deficiency, why my clothes are always wrinkly.
Marty only drives the DeLorean from time to time. And with great power comes a great electricity bill.
Yeah, so here's a quick video on the DeLorean. Oh, no, it's not. We still have last week's in there. So, hey, here's last week's. Watchdogs on duty. We named our puppies Rolex and Timex, and we considered them watchdogs. So, we're going to move on. I really like this one. Vasectomy survivor. I kid you not. Is a chicken coop with 4 doors a
chicken sedan.
Yeah.
And with that, we've had our fun. Let's wrap up.
Let's do it. Hey, drop us your favorite pun, and we are going to close it out today. And thanks for joining us for this week's episode of What's Up with Real Estate. A big thank you to our sponsors, Rate and List Reports, and of course, you, ChatGPT Soul. You did a great job hosting today. I think next week we're just going to make you the host, and I'll be the co-host. And hey, I'm accustomed to being a co-host. And if you found value, please like and share. And if you want to plan on a pitch, you can always book time with yours truly, Team Mortgage Mack. And remember, knowledge is the key to making the best decisions for you and your family and your clients. Join us here every Saturday, 10 a.m., right here on LinkedIn, Facebook. And until then, stay informed, stay engaged, and I'll see you at closing. Soul, say bye.
Goodbye, everyone. It's been a pleasure co-hosting with Mac. Stay sharp, keep smiling, and we'll catch you next Saturday. Take care.
Bye.